Good afternoon, everyone. Hi, this is Michael Stanisz here, and I'm with Kelly. Thank you very much for joining us to talk about precision pricing, unlocking profit to outperform competitors. This is the fourth of our webinar series, so we're happy to have you along with us today. I'm going to hand it over to Kelly to do a brief introduction, and then we'll get moving with some of the content here.
Absolutely. Thank you, everybody, for taking the time today. I really appreciate you joining us. I'm Kelly Brew, I'm a director with the Alexander Group, focusing on our business services and tech verticals based in our San Francisco office. Excited to be here with Michael today, and I'll turn it back to Michael to walk through the materials, and then we'll be jumping in as well to provide kind of some additional color in terms of what we're seeing with our clients at the Alexander Group and go-to-market models, as well as pricing.
So as mentioned, this is kind of the fourth of our kind of six-part series around precision pricing webinar series. So today we're going to be really talking about getting a good understanding of different pricing models that we see out there today, how the landscape is evolving and how the landscape is changing, and then what that means for a lot of companies as they start to think about how they change their pricing model and pricing strategies over the coming months and years. Really, on the next slide here, what we're going to kind of go through today is we're going to talk a little bit about the evolution of the pricing model. We're going to talk about some of the benefits that are around some of these models, and we'll give you a good background of how some companies are really changing the way in which they bring pricing to their customers. So it should help you get a really good idea of what are some of the new pricing models that are out there today, and how are people really thinking about them and using them in their different industries. And lastly, we wanted to go through really around how do you think about what the implications of these models are for your business, and how do you think about if you're looking at capturing more value and shifting the way in which you price today, how should you consider and manage the trade-offs between these different models, and minimizing risks and making sure that the transition is smooth and you're maximizing that ROI. So a lot of stuff to pack in the next 30 minutes or so. And then at the end, we'd be glad to take some questions if they are out there as well. So really, when we think about the different pricing models, there's a lot of different things that kind of exist out there. But what we look at and the evolution of where we've come from and where we go, we say very much so the traditional approach to pricing is understanding what's my cost, I'm going to put some margin on top of that, and that's what I'm going to charge the customer. What we've seen the migration of in the last several years is really moving towards subscription-based pricing, usage-based, which has been really popular in the software and technology space, and very much so a move into value-based pricing. So trying to understand what is the value that we are charging to customers, and how do we start to think about capturing more of that value. So not so much relying on just the cost, but really thinking about how much value we're delivering. Now, the downside of these models of subscription and value-based and usage is that it increases complexity. The cost-based model is very simple to implement. As we get more into some of these strategic models away from the traditional ones, we start to have to track different things. So we have to have a good segmentation to have value-based pricing. We have to understand customer usage. We have to understand how customers are going to move between tiers if we have several different price tiers or different options. So it creates a lot of additional pieces to how you think about the pricing framework. But the thing is, it starts to deliver much more value. We could capture more money on the table. We can start to price discriminate in a couple of these different places and make sure that we're extracting the maximum value and the customer willingness to pay for everything that we're putting on the table. What we're seeing a big shift in the last 3 to 5 years is now getting to some of these more innovative solutions where we're calling them kind of dynamic pricing and outcome-based pricing. You know, the airlines have been using some form of dynamic pricing for a long time, but now we're seeing a big shift into more traditional industries that are starting to use some of this technology and really outcome-based pricing. And what will give you a couple of good examples is how some traditional businesses have started to use that outcome-based pricing and how they're starting to think about, you know, moving and shifting away from strictly the cost plus and even moving away from some of that more strategic pricing into really innovative things that can really capture and share some of the risk with their customers. Now, one of the things I want to call out, and we get this question a lot, is, well, it's great that we have this evolution of pricing, but what does that mean in my industry? And we've pulled out a couple of verticals that we work in on a regular basis, mainly life science, manufacturing, technology, and business services. And we've kind of outlined here on this slide what we're seeing as a shift from pricing models that are really outdated and stuff that is now kind of getting into the cutting edge and some of the stuff that is just normal that we see on a regular basis. And one of the things I wanted to call out as we look at all the dots across the outdated to the normal, you can see that it varies very much by industry. Very much so in the life sciences, given that there's a huge investment up front. Cost-based pricing isn't much, it's outdated. People are still doing it out there, but we don't see much of it. You know, the life science space is very good at understanding the value, understanding the usage. We're even seeing some subscription-based pricing, but now we're seeing a lot of companies in the cutting edge on the life science space is really outcome-based pricing. And sometimes you'll hear this in different industries called solution-based pricing as well, but this is really pricing based on the outcome that we would expect. And the nice thing is that share some of the result, share some of the risk with the customer or patient in the life science space, but you can capture much, much more value. And we're seeing that as really cutting edge in this space. On the other end, when we look at manufacturing and we look at the spectrum across manufacturing, you know, we would argue that cost plus is still not outdated. A lot of people in the manufacturing space are using cost plus. You know, we're seeing more and more companies moving towards that cutting edge spectrum, but still very much behind their counterparts in life science, where it's much, much more the norm to use some of those more traditional pricing approaches. The technology space, everyone, of course, knows that subscription usage and value-based is very, very popular here as well. This is really where subscription-based pricing kind of took off in the last several years. But there are a couple companies out there that are using kind of cost plus still, very, very outdated. So if you're in that space, you should really be thinking about, if I'm using my cost base, I should really be thinking at least at a minimum being a value-based or usage-based to make sure you're keeping up. But again, we're seeing more and more of these technology companies starting to push into that sphere of outcome-based pricing and really putting the risk, but also the reward on the table with the customer. And finally, in business services, you know, very much so, the norm has been, you know, cost plus or usage. We see very little subscription-based pricing, not as much value-based, but again, this is really where some of that outcome-based pricing has been evident. But really, very much the norm in services is people are still looking at probably an hourly rate or a fixed fee as opposed to really getting a good understanding of what is the size of prize on the table and how do we make sure that we're capturing some of that size of prize and the benefit that we're bringing to customers.
Yeah. And I can speak to specifically in the technology space, we see a lot of usage-based or consumption-based pricing. I see that typically in some companies still even making that shift to that consumption-based pricing. And then subscriptions also being hot too. A lot of folks asking about kind of freemium models from a pricing perspective, how does that play in? But then those kind of top of the market folks moving to that outcome-based pricing as they shift to a solution selling mindset, and as kind of their sales motions shift, that pricing is also shifting to that outcome-based piece.
Yeah, absolutely, Kelly. And I think the freemium piece is a great point, because we see that very much so as a market penetration tactic, as opposed to, you're really trying to get someone usually into some other pricing strategy, but it's very much, we would look at that as, hey, it's a market penetration discount strategy that you're really trying to push someone into that pricing model. But absolutely agree. And I love the shift towards kind of that solution-based selling and solution-based pricing. What we kind of talk about here on the next slide, and I think I kind of touched upon it a little bit earlier, but it's really, there's all these different stages as we talk about the evolution of different pricing models. And the thing that often comes to us and people talk about is, oh, we should be doing dynamic pricing or outcome-based pricing. And what we time and time come back with is that it's not, just because you're more evolved doesn't mean you're necessarily better. And it's really a trade-off, and you have to have a good understanding of what are the benefits and what are the drawbacks that are going to be relevant for your business, because it's not as simple as just snapping your fingers and moving from a cost-based model to an outcome-based model. There's a lot of blocking and tackling that needs to happen. So it's really good to understand that maybe there are some benefits to having a value-based strategy. In a lot of industries, in a lot of places, sometimes the cost outweighs the benefit that you're going to get from moving away from a certain strategy. So, cost plus is very easy to calculate. It ensures that you're going to hit a minimum threshold margin. Now, you may overlook the value, but that's okay in some cases, because you know what, there might not be that much value on top of that. So we always talk about that. Yes, the pricing model and everything is evolving, but it's not necessarily, that doesn't mean it's necessarily for everybody. But at the other end of the spectrum is, you should always be looking at what are other industries and what are competitors and what are other people doing in the space, because a lot of the times there is a lot of opportunity to capture dollars on the table by moving from some of these from some of these models. So for example, if you're moving more to a value-based model or a dynamic model, it allows you to really change when market factors are changing and capture that value, but it requires more sophistication in systems. So you really have to assess where how the pricing model fits into your broader business strategy. One of the things we wanted to kind of really bring you guys is a couple of great examples of how are certain companies really starting to think about moving away from their traditional models, and how are they bringing some of this outcome-based pricing or solutions-based pricing to life. And brought a couple of different examples of how people are doing in different industries. In the business services side, we've seen that in contract manufacturing and contract researching. Very typically has been a per hour charge, very cost plus, that, hey, this is how much this resource costs and this is how much this costs, and we're going to put our markup and it's going to be this many hours. And what we've seen is some of these companies in the services have started to be able to get an understanding of, well, what project are we working on? So this research that we're doing and this manufacturing that we're doing, what is the upside? And a lot of the times, especially when we look at some of these things in relation to life science, the research could have really, really, really big size of prize. It could be, billions and billions of dollars of benefit that could be on the other side. So how do you start to think about not only charging, the per hour rate plus a markup, but how do you start to put together contracts and terms that you can actually capture the value of when some of these things come to market? So we've seen several organizations in that space be able to do that and build in some of those success metrics that they get an upside if the research that they're doing does end up with significant commercial applications. Another great example is a very traditional manufacturing company that, you know, they were creating basically IT hardware. Very much a traditional sell of, okay, I'm going to give you some cables and here's some boxes and here's some different things. And it was very much a transactional sale. And what they've transitioned to is solution selling and getting an understanding of, well, where are these cables? Where's this equipment going to go? When we're building out a hospital, you know, how do we start to think about, we're not just selling cables and boxes and equipment, we're outfitting this hospital. And how do we bring a program to outfit that? And how do we start pricing for that? And really thinking about how we bring a pricing bundle together as opposed to just pricing products one by one. And the last kind of model, or the last example I'll give you, is in the technology space. When we think about different softwares that are out there and SaaS companies, we worked with one very specifically that what they were able to achieve is really moving away from a usage-based pricing philosophy based on subscribers, and really getting an understanding of our solution is saving significant money for our clients. How do we start to think about capitalizing that, and how do we start to think about communicating that, but also pricing based on that? So, you know, if two different customers come in, if we're saving a substantial amount of money for one, how do we start to price those contracts and those terms in that way that we can get some of the size of the prize as we're doing this? So these are just some examples of businesses who traditionally have had very different pricing models that have been able to start to think about and evolve and see a lot of success with changing their pricing models to something that's a little bit more sophisticated. One of the things that we kind of call out, and which is really, really important as you think about the fit. And if you're ever going to change your pricing models and think about evolving down this curve, it's really important to keep these three key questions in the back of your mind as you think about transitioning that model. The first is, what is the size of the benefit of the change? So if I'm thinking about changing my pricing model, are we talking about substantial percentage points to the bottom line, to the top line? Are we talking about hundreds of millions of dollars, billions of dollars, or are we talking about just a little bit of benefit? So it's really important that as you think about where your pricing model evolves to, and as you change, you have a good idea of what is the benefit of that model changing, and what is the dollar size behind that. The second thing is really getting an understanding of how quickly can we make these changes. This is something that becomes really important because typically we have contracts that out there, we have terms, we have existing customers, and it's less about just changing the model and communicating that out there. It's really making sure that our existing customers and our teams understand and identify what we're going from and what we're going to. And this includes training the sales teams, making sure that their compensation is set up in the right way, making sure that all of your go-to-market still makes sense as you change that pricing model. And that takes time. So it's really important to get a good understanding of not only, you know, how long is it going to take me to do the analysis of where I should be moving my pricing model, but thinking about what is the speed in which I can implement this. Is this a one-year change? Is this like a multi-year engagement that's going to take stages? So it's really important to kind of make sure that you have a good understanding of that. And the last thing is the certainty. And how do I make sure that I'm certain that I can actually capture a lot of that value? A lot of the times we see people trying to change their pricing model based on a hunch or based on gut feel. And how we always talk about making sure that you have that certainty is that whenever you're making any of these substantial changes, they have to be rooted not only in the data that's coming from your business and the analytics from your business, but they also should be rooted in some kind of customer validation. So whether that making sure that we capture that voice of the customer and they have a good understanding of, yes, this is what is going to happen when we change these models, and this is how people are going to transition. So those are three really important questions as you think about that pricing model change. to address and keep in mind as you move along this journey?
Yeah, and just want to reiterate what Michael said about kind of the speed and being able to make that shift. There's so many other pieces that come into play. So if you are changing your pricing model, you want to make sure that, I guess, number one, your sellers are prepared to execute on that they have kind of the training and enablement and the knowledge base to make sure that they're selling the new pricing and that they're able to tell the story to convince customers to buy. And kind of that example on the last slide in terms of the segmentation piece and thinking about customer personas as well, that would even take a larger shift, but that's where we see a lot of companies going kind of as they optimize using kind of data to their advantage to better segment the market and give kind of more pointed value propositions and sell to specific customer personas. And then this pricing piece maximizes that impact as well by being able to price for those specific customer personas and specific customer segments as well.
Yeah, that's a great point, Kelly, and I think it definitely ties into the next slide that we had here about what are some watch outs that we need to make sure that we're making sure that we try and avoid failures. And I think there's four big things that we kind of talk about. Really, the first is just the misalignment internally and externally of the team and not having a good understanding of why the pricing model is changing, how it's changing, and really what the implications are. So exactly what we were just talking about, making sure that you have a really, really good understanding of why that's happening. And a great way to get around this is make sure you communicate, over communicate, get a good cross-functional team involved from an early stage. And I think one of the things that we often see is that people try and kind of rip the Band-Aid off. What we find a lot of the times is if you're going to make a big change like this, it has to be a gradual implementation, whether you're doing it by different products lines in a certain geography, but take your time and make sure that you're doing it in a graduated way. The other is really what happens is there's a skill or a process gap that happens. And really, this is when the team doesn't really understand what the new process should be for pricing. So it's really important as you're kind of changing this model, you're investing in the skills behind the team, you're doing some of those training sessions. And one of the things that often goes unrecognized is having a centralized pricing team, making sure that there's someone in the organization who owns this change and who's going to own that function. The other two really are around, not having the data and the capabilities. This is time and time again, as I mentioned, when you move into some of those more complicated pricing structures, you have to make sure that you're tracking the data, that you have the systems in place to be able to actually implement some of these things. A lot of the times we see people who they want to move to something more sophisticated but don't have the infrastructure. So it's really important to have a good understanding of that infrastructure. And with that, it's not only having the infrastructure, but making sure that we have the right KPIs, making sure that we have the right systems to measure that we're actually making an actionable change. So it's really important that anytime you're making these types of changes to a pricing model, you have really strong KPIs and performance metrics to be able to back those up. So I know we're coming up on time here. We have about 5 minutes, so we wanted to leave a couple minutes for questions. But really, I think if we could sum it all up with the next slide on really what we hope you kind of took away from today's session is really around, there is a lot of sophisticated pricing strategies that are out there. They are absolutely an asset. They can help you unlock growth. They can help you unlock revenue and profitability. But with that, it's not a one size fits all. Different by industry, different by organization. You have to really get an understanding of where you want to sit and how you adapt that to your business goals. The third thing really is, we talked about the benefits and drawbacks. Nothing's going to be perfect. There's always going to be different benefits and drawbacks to taking different strategies. So make sure that you assess those fits and you have a really good understanding of what those trade-offs are. Number 4, make sure that you're asking those 3 questions. What is the size, the ROI, what is the certainty, and what is the speed in which I can actually make these changes? And really think about avoiding some of those typical failures that we see, or typical stumbling blocks, and have a migration plan and have a mitigation plan, and make sure that you have the right mix of training for the team, you have good communication, you have good systems and good KPIs to be able to track some of these changes that you're making. And with that, we would love to open it up if there are any questions out there.
I know one question that we get quite a bit, Michael, across kind of the whole spectrum of go-to-market, but also specifically on pricing, is how AI is playing into pricing. Could you speak to a little bit about what you're seeing with customers?
Absolutely, and I think this is one of those things that we kind of put up dynamic pricing there, and one of the things that we hear a lot of the time is people talk about, hey, I want to be like some of these airlines, and I want to have dynamic pricing and AI, and I want it to kind of tell me what's kind of out there. And I think the way we see it is that, especially in a B2B environment, we're seeing the emergence of some of these AI technologies, but I would say that you can't use a black box to set your price. AI and the emergence of some of these models, they're great resources and they're great tools to be able to inform your pricing strategies. So what I mean by that is they can help you really identify strong segmentation. They can help you find leakages. They can help you build really complicated elasticity models to understand how your customers are going to trade off between price. But what is really difficult is if you're using a black box to price and you can't justify your price or you can't explain it to a customer, it makes it really, really difficult. And what I would say is we don't see, at least in the short term, that AI is going to replace kind of a traditional pricing strategy. It can definitely help support a pricing strategy, but it's going to be very difficult to go in and justify to a customer that, well, here's your price. I can't tell you why, but the model and the black box told me that this is what it should be. So it can help you make recommendations, but you still have to have a strong selling story. You still have to have justification for why you're charging what you're doing, and it has to be simple for the customer to understand. A lot of the times these AI solutions, they're very, very complicated, and you have to be a mathematician or an engineer to understand the back end. So if a customer can't understand it, it's going to be very, very difficult to push it across the line.
And just to build on that, I think one of the trends that we're seeing with clients across the board is increased demand for transparency overall, and including transparency in pricing. So understanding kind of how you built a price, how you got there, and what they're getting for it.
Absolutely, and this is even more so when you're working with procurement teams, right? They want to know every single line item, and they want to have a really good understanding of how the pricing is being built up. So I don't think bringing an AI model is going to work too well against a procurement professional.
Absolutely.
So I know we're up on the last minute here. Just a real recap, last 2 slides here. Our pricing services, AGI, RML, we work hand in hand, because as you've kind of seen through the presentation today, that pricing is just the tip of the iceberg. It's really important that pricing ties so much into other pieces of the organization. It ties into comp structure, it ties into go-to-market. So all of these things are really, really interconnected. But the things that we focus on are really building out that pricing strategy, optimizing it, not only the price, but the discounts, making sure that the pricing operations is in the right spot, but also executing and making sure that the sales team has the ability to execute those different pricing strategies. So we hope that you guys got a lot out of today's session, and we really hope that you'll join us for the next one, which is going to be number 5 in the series around pricing. Thank you very much.
Thank you, everybody.